Morning. Good morning, people. Hope you're doing all well. What is it? It is December 18th, Monday. So we're now entering the holiday season very, very officially, right? This is the last trading week, a full. This is the last full trading week of the year. So we're wrapping the year up, and interestingly enough, right, last full trading week, we have Christmas and Boxing Day on Monday and Tuesday next week, so markets are going to be closed. And the interesting thing about this is the end of the year, right? A lot of people are looking at this market just holding close to all-time highs, rotating here. People trying to call tops, people trying to make extreme gains into the end of the year. A lot of this realistically, right, should be put on hold, and I think that people should just walk away from this into the end of the trading year. So final week, I'm going to be taking it slow. Going to see what's going on, right? Going to be posting some stuff on YouTube. I'm planning to stream at some point this week to see how we can kind of read this market, what's going on, so on and so forth. But as we enter the final stages of the year, we've had a pretty good year in the markets, right? The S&P 500, the SPY, we can pull that ETF up, and I'll post a video about my thoughts on the year and into next year, so on and so forth. But a quick little wrap up here as we start the week. We have the S&P 500. Where were the lows of the year? Somewhere here, right? We're up from lows to highs about 25%. Now, a lot of people didn't see this coming, especially with all of this Fed talk, right? Tightening cycle, rate hikes, so on and so forth. So I'm not gonna dive too deep into this on the medium and long term, but it's gonna be something that I'm gonna be taking a look at over the next few days, especially posting on YouTube here. But this week, right, we're shaping up after a Fed decision that came out last week that popped the market pretty aggressively. And we had some good news out of inflation as well that held up some of this upside. So the way I'm seeing this is that this week, right, I think that the seller, or I should say that the buyers have a chance to kind of let go to allow the sellers to step in slightly before new big buyers come in and we pop into all-time highs. Now, one of the hardest things that people have, I'm sure, have realized this year is that calling tops is a very, very difficult game. So a lot of people shorting this whole way up, right, have been beat up really aggressively, and trying to call the top isn't necessarily something you want to do. You want to just allow prices to settle out and then present a top for you. Now, last week with the Federal Reserve and the rate decision, right, a lot of economists, a lot of analysts, investors, traders are looking to celebrate what they might call the path to the soft landing, as inflation is projected to near the Fed's 2% target next year without a recession or surge in unemployment. Remember, Jerome Powell quarters ago mentioned that that might be one of the biggest sacrifices. We might have to see inflation we might have to see unemployment at 10% for this thing to kind of settle down. Now, according to the Congressional Budget Office, right, we might see the target of 2% inflation getting hit without a recession or a surge in unemployment. Now, I don't necessarily think that's true. I think that these things are kind of overreached, and the Fed has still a lot of work to do, as inflation is fairly cyclical, as we'll see. Now, inflation is expected to fall down to 2.1% in 2024, reflecting softer labor markets and slower increases in rent, but will uptick to 2.2% in 2025. Now, I don't necessarily agree with that, but this is what they're saying. So the CBO also expects real GDP growth to slow 1.5% in 2024 amid a slowdown in consumption, investment, and exports. So this is very, very bullish and optimistic sentiment, realistically. I think that everyone should be very weary and tread lightly, as I think that a lot of people should remain solvent and liquid going into 2024 and even into 2025, because it's not as clear-cut as they're making it out to seem. And this is one of the topics that I do want to discuss in fuller length a little later, but generally speaking, I think that the Fed is going to I should say, they're going to start the easing process a little too early, and what we're going to see from that is going to be some kind of larger market reactivity where they're going to have to ease very, very quickly. Inflation ramps up again, and then we re-begin a hiking cycle that kind of has massive oscillations in the economy and the market over the next 2 years. It's going to be very, very difficult, but I think all in all, we're going to find a great opportunity within the next 2 years or so to have a longer term view of the upside in the markets as long as things smooth over. So remember, COVID, right? We had a lot of supply chain issues. 2020, 2021, 2022, right? Supply chain issues and inflation really hit the economy and the markets. And then 2023, interest rates. So now the biggest investment risk is going into 2024. Looks like it'll be geopolitics, right? Traditional relationships and alliances are breaking down, and a more polarized world has been given a way to structure market risk. It's also it can also be hard to plan for such wild cards naturally through broad hedging and defensive plays. Could be a key part in investing in the strategies in the coming year. So one such risk is already on full display with Iranian-backed Houthi rebels in Yemen conducting repeated drone and missile attacks on commercial vessels traversing the Red Sea. So we've seen that the Bab el-Mandeb Strait is a crucial shipping passage that facilitates a sixth of the world trade and is important to global seaborne commodity shipments like crude oil, and insurance premiums have risen as a result and have even prompted the world's biggest container shipping lines to avoid the Suez Canal by diverting their cargoes towards the other routes around Africa, right, to circle around Africa. So among them is Swiss-based MSC and French CMAC GM, as well as Danish AP Moller Maersk, and German Hapag-Lloyd. So the Hong Kong-based OOCL as well, whose stocks have climbed about 8 to 15% over the past week amid these rising prices. Now, I think that this plays into the commodity cyclical advantage as well into 2024, where oil is one of the main things that I'm watching for. Crude oil, I think that we're in a bottoming area, right? I think that we have bottomed or are near a bottom in crude oil to expect to look at some of this upside along with other commodities like some precious metals that may have lagged and, right, some agricultural aspects. So there's a lot to look for into 2024 with a lot of opportunity. I think 2024 and 2025 are going to be extremely opportunistic to trade and invest both alike, which is, right, it's great because this is what we look for. We look for opportunity, a little more volatility, take advantage of these markets, but there could be cataclysmic events that leave people very insolvent, and if you're not liquid, it could be very, very bad. So with that being said, right, today we take a look at the S&P 500 futures, how we're shaping up and starting the week with sideways rotation, distribution block being created at the highs here over the last week or so. And a lot of people, right, they've been continuously trying to short this market, especially into the Fed, and you saw what had happened. So I'd be very, very cautious. Now, keep in mind, I am looking for a smaller pullback this week before we do venture into new highs. We're very, very close. The S&P 500 futures not back adjusted highs are 48.08. So keeping in mind, right, the high 80s, low 90s are the top band of the distribution. The low band is the 60, low 60, an area that was traded recently. So if we can manage to open one of these days under the 60, we could see that larger pullback where I don't think that it's going to be anything cataclysmic, and I think it's going to just be sideways rotation until we get that next leg to the upside. And a lot of that happens under 60, under 50 on the S&P 500 futures. So I want to explore the potential of the downside today, seeing if some of these sellers come in through these highs, especially this 80 and high 80s, to come in and try to push prices a touch lower through that 60 to explore some of the downside. Some of the downside targets I have for this week are 47, 37, 38, which I expect some buy pressure to come out at, and then final target around that 47.11. I don't necessarily think that's going to happen. We're running into a holiday season, right? This is the last full week of trading that we have ahead of us. So keeping that in mind, I want to wish you all a happy holiday season, right? Keep it light, trade smaller, maybe not trade at all. This is the final full week in the markets, and just keep that in mind for the year that is. you're not going to make back the year in a week. You're not going to break the bank in a week. So you have to keep that in mind going forward as we enter a period where you can lose your ass. So keep that in mind. Let's trade smaller. Let's trade smarter. And let's open up our live trading room. Keep in mind there's going to be more streams throughout the week. So I hope to see you guys there. I'll post about them as well. And why don't we get this week started? So I'll see you guys tomorrow. Actually, I won't see you tomorrow. I'm actually flying back to Toronto for the holiday season. So tomorrow is going to be just completely wiped off my calendar, unfortunately. And then I'll see you on Wednesday. So thank you all. Enjoy. Let's open up our live trading room. Check us out at community.tradeproacademy.com for our free Discord. And I'll see you all on Wednesday and to wrap up the week this week. Thank you and take care, everyone.